Wait, you're not Merlin.
There's a podcast called Between Two Slabs. They consume mass media. It seems so sad. It's the great curator and Merlin. They can't grow pubes, so they gotta wear a merkin. They got no money, so I guess they gotta share. Just two nerds wishing they could grow body hair. Comics, cards, and toys, nothing that would interest you. It's the podcast that nobody listens to.
All right, welcome guys, and welcome to our special guest here. You guys have noticed if you're watching this live, this is not Merlin. This is James Skorheim. He goes by the Hobby CPA on Instagram, and he is our special guest filling in for Merlin this week. James, how are you?
Doing well. How about yourself, Dan?
Good, good. Now, I've teased this for the better part of like a year now that I'm going to have a CPA on the show. We're going to answer tax questions around the hobby. So I've kind of teased this for for several months now, but it's been very difficult to lock you in because you're so busy. You're so busy with your practice, and we're going to get into all that. But I am actually very excited to finally be able to carve out a little bit of time in your busy schedule and get you on to the show here. So thank you so much for making time to do this today. I really appreciate that.
Thank you.
I think that it's worth noting that last year when I tried to get you to do this, or even earlier this year, it just wasn't on your radar, right? It wasn't on your radar that to make time to do something like this. But I feel like because you have recently got into the hobby yourself within the last few months, pretty heavily, I might add, that maybe you were more incentivized to come on the show and talk about this. Is there any truth to that?
There's a bit of truth to that. Yeah. And it all pretty much stemmed from you, Dan. I didn't really explore Between Two Slabs until this tax season, and late nights working at home, just kind of had it on in the background. I'm like, this is fantastic. I have a great resource in this client and just fun stuff. So thought I'd get back into the hobby a little bit. And that's where we are.
So just to give people a little bit more context here, you are my CPA. You have been doing my taxes for like 5-6 years now. And kind of like the stuff that I do. And you've been seeing me when I come to you for our yearly tax planning meeting. I always tell you, okay, I'm doing this within the hobby. I'm doing this. I'm buying, selling cars. I've got this business, blah, blah, blah. Right. But I don't think that you really, you didn't really look at it at the hobby as anything special until you discovered Between Two Slabs, right? And then you went down that rabbit hole and started watching all our episodes, which when you told me this, I thought it was hilarious. I was like, are you really binge watching Between Two Slabs episodes? But I guess you did, because you were mentioning all these little anecdotes from all our different episodes. And I'm like, oh yeah, he must really be watching this. So that's really funny to me.
Yeah, it was actually super entertaining. I like to have just something going on in the background, talk radio type stuff, and your show was perfect. You don't have to stare at it the whole time. It's nice too. I like, when you guys do mail day kind of stuff. My favorite is What Really Bends My Corner.
Yes.
Definitely a super fan now.
Awesome. And then not only did you kind of go down the rabbit hole of watching Between Two Slabs episodes, but you also got into the rabbit hole of collecting piggy banks cards. How did that happen?
So just out of intrigue from like you doing giveaways, the come find me type stuff. I'm like, I got to check out what this is all about. And, it didn't really register at first. You'd talk to Merlin quite a bit, Merleworld, about like rarity and art cards and these kind of like one-of-one like art pieces. And it just tickled my fancy and started looking into it. And I'm like, wow, this guy does some really cool stuff. And just kind of saw it as like a mix of like the hobby world and Banksy, like a street artist or a pop artist, and just figured I'll jump in. And it was definitely the wrong time, because everything is like blowing up on eBay and it's not easy to get right now.
Well, but you actually been able to get some directly from his website and stuff, right? So you got it while, at the retail price before you had to go to the secondary market. But how many piggy banks cards do you have right now?
So here I have 2, 4, 6, 7 of them. And I have quite a few on the way in transit.
That's great. That's great. And I remember seeing a post that you had the prayer hands Leia card that was
Here.
lost, but you found it, right?
She is in good hands.
Oh,
She's
wow.
in good hands. Yes. No, it was so my building, it was delivered 1 digit off. Our office building's like 5 identical buildings next to each other. And mine's 25301, and they delivered it to 25401. And then whoever over there sat on it for like 2.5 weeks before they brought it by the office. So I thought it was like gone, completely gone.
Wow. Okay. Well, I'm glad that you finally got that. Okay. But okay. So now you're in the hobby. So now you got a little bit of street cred to you. You're a piggy banks collector. You're also a Saturday morning cards collector. You're getting pretty deep into that. That wasn't because of me, right? That was like completely on your own. You decided to do that. I didn't tell him to buy anything, guys.
It is, but at the same time, like I want to support my clients, right? And so like I support you, you do well, I do well. It kind of like goes in circles, right? So there's that part of it, but it was really like, whoa, what a great idea, like, and it's like pretty beautifully designed. And I'm like, all right, let's do it, and then it like got me even more publicity a bit because I would like, give out base cards that I pulled, and then, they like praise me here or there, like, so it's just gone full circle. It's good.
And you are actually trying, I don't know if you're still trying to do it, but you've got most of the alpha cards, the one of every series. You're trying to do the alpha rainbow, as I call it.
Yeah, I didn't really want to put that out there, but yeah, like so if anyone's got the silver cracked ice, I know the 101 hasn't been pulled. I watched that Whatnot earlier today. So yeah, kind of on the lookout and just interested to finally see it on Instagram.
Awesome. Okay, so we're going to be on the lookout for that for sure. Before I get into your professional background and your qualifications, I just have to take care of a little bit of business right now. The contractual obligations here, guys. We must talk about our sponsors that are sponsoring and powering this podcast. Starting off with our top line sponsor, Zion Cases. I don't need to tell you guys who these people are. They make the best storage and carrying cases in the hobby. Zion Cases. Go to their website. Use code Curator for that. Who else is on this here? Stand Up Displays, longtime friend of the podcast. They make my Curator stands here, but they will also make any kind of custom stand. So maybe you might have to get a Hobby CPA stand at some point in the future. So use the code Curator for that. What's the other one here? I got all these props I got to pull out here. Graded Guard is another good friend of the channel here. If you want these colorways or a great way to protect your slabs, use Graded Guard. Use code Curator for that. Who else do I have to talk about? Veriswap is the premier trading app in the hobby right now. If you don't want to get scammed, use Veriswap, guys, because that's what I thought happened to you. I thought maybe you got scammed at some point on some of your transactions, but luckily you got that piggy banks in the mail and you got a refund on that and everything like that. And it worked out well for you. But if you guys don't want to get scammed by doing these deals on Instagram or Facebook, use Veriswap. It's a great app. And then last couple sponsors here. Third Down Displays. They are a UK-based sponsor. They are running the Card Locker UK system. So if you need to ship anything from the UK to the United States or vice versa, and you want to kind of group everything together to save on shipping costs, make sure you reach out to Third Down Displays and use the Card Locker UK service if you want to buy anything out there. And then last but not least, where is it? Mr. Minty, the preferred card prep grading kit for us at Between Two Slabs. And also don't forget what I think is even more impressive is his submission service that he's offered now. So you can actually send cards to Mr. Minty, get them prepped, and he will submit them to PSA for you. And if you're lucky like me with that Kobe Bryant Platinum Portraits, you might get a really good grade and be able to take advantage of his expertise. So that's all the business we're going to talk about. Let's get straight into talking to James Skorheim here. He's known as the Hobby CPA. He is a certified public accountant. Tell us a little bit about your practice, James.
Sure.
How long have you been in practice? And as I understand it, it's a family business, right?
It is. So kind of grew up in an accounting practice. Pops was always a CPA. He's actually a CPA and attorney. Grew the practice, a good sized tax practice when we were young. And then we kind of went into like litigation support stuff for a while, doing expert witness testimony in court. I did that for a little while, hated it. Then came back to tax when COVID happened, basically. And I've been doing tax since 2014, but kind of was focusing on the litigation thing for a while, and just started building up the tax practice. Love helping my clients, and that's where I'm at now.
And I was reading, do you have like are you also like a financial planner too, or advisor?
I am. I'm a financial advisor, and I have a wealth management company, and we manage about $70 million in assets.
Oh, wow. Okay. And is that like mostly like what type of assets do you direct your clients to invest in, like real estate or stocks or what?
It's all portfolio holding. It's all right now. It's all fixed income because interest rates are so high. But it's all like retirement, trust money, safe, long-term type of investments.
Does that include any like alternative assets like artwork or anything like that?
No, it doesn't.
Interesting.
Yeah.
Okay.
Yeah.
All right.
Yeah. I was going to say that could be a part of my client's portfolio, but it's not what I manage.
Maybe as you learn more in the hobby, you might, I don't know, direct some people to some of these alternative assets, because I know for a while there's been like this movement to try to establish like sports cards or collectible cards as a alternative asset class that people want to take seriously, right?
Absolutely. And, for high net worth individuals, they can take advantage of collectibles because the typical capital gains rate on a collectible, and we can get like further into this later, but it's 28%. And so if you're a taxpayer in the highest tax bracket, you're going to be paying a lot more on your interest and dividends than you would if you sold a collectible.
So what would be, so for people who don't understand that, like what would be the highest tax bracket that somebody could be in?
Like a 39% federal tax bracket. And so
federal, okay.
Yeah. And so today, like I'll kind of keep things in federal terms because people can be all over the United States. All the states' tax rules are completely different. Some states don't have taxes. But yeah, because the biggest elephant in the room is the IRS. We'll kind of focus on IRS rules.
Okay, so we're talking for the purpose of this discussion, we're going to be talking about federal taxes from the IRS. Depending on what state you live in, it could be completely different. Some states don't have state taxes, like Texas, for example, but other states might have high taxes. Like I live in California, so obviously we do have state taxes here. But we'll keep this discussion in a very general sense for federal tax purposes. Do we need to make any type of disclaimer about like advice that you're going to be giving out or anything like that? Do you feel like we need to do that?
The only thing I'd like, it's just general information for everybody. Official tax advice is a very specific, term of art for one taxpayer's very specific situation. So today it's just informational overview. Call me if you have a specific question, a very specific question, or email me. But yeah, today is just kind of informational, like educational.
Okay, and just for people who are going to ask this, so you're based in California. Your practice is based in California, but you can help people in any state.
I can.
Okay, and so you can file taxes for people in any state. If they live in Florida, you could do their federal taxes.
Absolutely, I have clients all over the United States, and a lot of clients here that have interests in a lot of different states. So have to file all over the country.
Okay. All right. You guys heard it. So if you like what you hear here, you can use James as a resource, and we'll get more into that as we get deeper into this conversation here. Okay. So so we've already kind of talked about your background, been practicing for 10 years. You have a family practice. How long has your family been practicing, taxes?
Yeah. So since I was a kid, I don't know how far back my dad goes, We still have one of his original clients, but when he went into litigation, he basically sold his tax practice to Moss Adams, one of the big, huge accounting firms, and they brought his tax practice in, and he just did litigation. He got sick of it after a while, came back out, and restarted the whole tax practice. So there's a little bit of a gap where all he did was forensic accounting for court and expert witness work. But we've been in the accounting business for ever.
And I think I was reading on your website, like combined 50 years between you, your dad, your brother, and then you have any other family members that are part of this practice?
Well, my sister-in-law, she is working for my brother in his side of the practice. And then I have family members that also do tax down in San Diego, but not part of our firm.
Oh, interesting. Okay. All right, cool. So you got decades of experience behind this.
That's
okay.
right.
So you know what you're talking about. Okay.
That's right.
All right. And as far as taxes in the hobby go, I'm sure like from our own interactions from using me as a client, you have a basis of knowledge on how the hobby works a little bit. But I think that you said that you had other clients that were also in the hobby.
I do. I have other clients that are like providers to the hobby. And then other clients like yourself who trade, sell, buy collectibles. Other clients that are more like, I'm not 100% sure you're not in this world, Dan, but they sell dollar cards on eBay. So kind of the gambit, so to speak.
That's interesting. Okay. So you know what's kind of interesting about the hobby? It's like, as far as I know, nobody has ever, come out and tried to be a offer like CPA services for the hobby community, which I can tell you, I can tell you from personal experience of all the people I know, people need help. People need help in terms of doing their taxes, how to tax plan, how to prepare, how to keep records, all this stuff. Because there's a lot of money that gets, there's a lot of transactions, right? And there's a lot of money that gets exchanged between people at card shows or online or, Instagram deals, and all sorts of things are happening within the hobby where there's a lot of money moving around. So definitely I've just kind of been astonished that there's nobody that's ever come out and tried to offer like CPA type services for anybody in the hobby. So this is interesting that you have kind of coined the name, the Hobby CPA. How did that kind of come about?
Halfway through you, Dan, like you've been urging me, you've been telling me this is a market that needs your help. I like the community, right? Like I've dealt with a number of people on Instagram. I've given cards and then they've given me cards back just randomly. Like I get them in the mail and they're like more expensive than the card I gave away to the guy, like super nice people. Kids in the hobby, like we need to support them so that the hobby keeps going. But also there's definitely like an immediate need coming up with this new 1099 rule that everybody's facing and that's been pushed off a bit. And so I just see that it's going to affect a lot more people.
Okay. All right. So let's get deeper into this here. Okay. So, the purpose of this discussion is if you are in the hobby and you're more than just a collector, you actually buy, sell, trade, and you do it on a regular basis where you're making, let's just say you're making a little bit more than the threshold that needs to be reported. I think that there was like, I think what's the threshold by like eBay and Venmo? And so like if you make more than like $600, you have to report income on that, right? Yeah. Is that the rule? Okay. So if you're in that category where you're doing transactions per year and you're making more than $600, which let's be honest, that's going to be like everybody. That's going to be like 99.9% of everybody in the hobby. This conversation is for you. And the question that I always get when I'm talking to my friends and other people in the hobby is they always ask, how can I phrase this? How do you avoid paying taxes in the hobby? Because whether you're a collector, a casual collector, or, you're like knee deep in the hobby like myself, you're going to be making substantial profits on at least some of your transactions, right? So like if you sell a card and you make $1,000 on that, by that rule, you have to report that income, right? How can people that are in that category offset that income?
Yeah. So, I mean, and first off, the rule is gross, right? It's not even profit, it's gross.
Oh,
Yeah.
even if
So,
you're taking the loss.
exactly. And that's
Okay.
why this is so big, right? Because regular like folks that like sell a handful of cards on eBay or whatever are going to have to start tracking like all their costs, all their basis. Because say you sell a card on eBay for $600, eBay is going to take what, like 15% of that.
Like 13%, yeah, around there.
Yeah, but they're going to give you a 1099 for the 600. So you're going to have to put I made 600 on the tax return, and then you're going to have to say, okay, well, I had these selling costs, right? Put that number down, and then the cost of the card to you, put that number down. If you got it graded, you got to keep track of that number, shipped it, all those numbers. So people are going to have to start keeping like records or spreadsheets or something on exactly what it cost to sell that card.
Okay, so what you're saying is basically like it's not about the profit, it's about the gross sale, because nobody really knows what the profit is, right? Unless you keep records of that. And you mentioned your basis on that. So for people who might not understand the terminology, can you explain what is cost basis?
Yeah, your cost basis is what you have into the card itself. So, for instance, if you purchased a card for $100, you bought Mr. Minty's kit and used it, that kit and the improvement, or not improvement, but the cleaning or conditioning of that card.
He's learning, guys.
Right. Yeah, I know. If you send it for grading, right, all those things add to the basis of the card. Okay. That's just your basis. Aside from that, you may have other expenses, but those are the amounts that went into the cost of that card. That's your basis.
Okay, so if you bought like a card for $100 and you spent $25 to grade it, and you bought Mr. Minty's kit to prep it, and that costs another $25, let's just say. So you're all in for about $150, and then you sell that card for either a profit or a loss. The cost basis is $150.
Yes.
Right. Okay. All right. But nobody's going to know that unless you report it. Right.
Right. But
because
the problem is you're going to get a 1099 for $200, and unless you have that basis added up for yourself, you're going to have to pay tax on the whole 200.
Okay. So what I'm hearing is basically like for the people that are buying, selling in the hobby, the only way to offset this profit, right, is by keeping records to kind of like deduct from the gross profit of your expenses.
Essentially, yeah. And again, that's kind of the first step, right? That's kind of the first step. My gross proceeds less my basis equals my profit. Now there may be other things you take off a profit, like the selling fees, right? Like the shipping and handling. And then beyond that, if you're doing enough business a year, there are other things you can expense as a quote unquote dealer or an actual business in the hobby world.
Okay, interesting. Okay, so we're going to get into that. Let's kind of like start off from like a novice point of view, like if you're just buying, selling on eBay, right? And then we'll get into if you become a little bit more like part-time, where you're going to trade shows regularly, and then we'll get into it whether you actually have a business around this, like an LLC or whatnot around that. Okay, so the way, basically, if you're making money in the hobby, to answer the original question, if you're making money in the hobby, how can you write off your card profits? The best and maybe the only way to do that is by keeping track of all your expenses to offset the profit. Right?
Exactly.
Yeah. And you mentioned like you're like these companies like eBay or I don't know, whatever, Venmo or PayPal or whatever, they're going to be sending 1099s to people. What happens if you don't report that and you get a 1099? Like what happens if you don't report the profits or just the gross sales that you made on eBay or whatever, but they issue you a 1099?
So if you receive a 1099 for eBay and you don't include it on your tax return, you will 100% get a notice, right? The notice in the best case scenario is going to say, look, we have this 1099 from eBay for $1,000. We're going to assess a 25% tax on that $1,000 because you didn't claim it and we know it exists, right? You got to claim no basis, no expense against that. They're just going to assume that $1,000 is pure profit to you. You can argue it. You can have your CPA send a letter. It could clear things up, but at the bare minimum, because they have a copy of it, they're going to know about it.
So, and that, so if you don't report it, they're going to automatically, that gives like a red flag for them to look into it and then audit you.
Well, because eBay, they have to send copies of those to the IRS, right? So I issue a bunch of 1099s for all my clients by January 31st every year. We send a little copy that you get in the envelope that comes in the mail, but we also have to send a copy with a report to the IRS each year. So the IRS, just like a W-2, they've got a copy of it.
Okay. So they know whether you report it or not. They know. And is it the kind of thing where they automatically flag you every time that it happens, or do they just kind of like overlook it and just decide they don't want to come after you, or is it automatic?
No, it's like, I mean, I think it's straight out of a machine, right? Like, Mr. Skorheim, you failed to report this 1099 based on the amount. We show you owe, on $1,000 if I'm in a 25% tax bracket. Mr. Skorheim, your tax due is $250 and you were a month late. So here's the penalties and interest associated with that. If you agree with this, pay $260, whatever it is, with the penalties and interest. It'll be that simple. Like, it's not like, oh, maybe I'll get away with it. They will just send you the notice.
So it's all like automatic. They're going to know no matter what. Okay.
Yeah.
And then you mentioned that you could contest it, but oftentimes if you pay your CPA per hour, depending on what they charge, it might not even be worth contesting, right?
Right. It could not be worth it. Yeah.
Okay. And you mentioned like we're using eBay as an example, but I know for a fact, like, because I've received 1099s from auction houses like Golden, for example, Golden Auctions. So anybody, any platform where you transact, they're supposed to send a 1099.
Yes.
Okay. Interesting. All right. So the best kind of practice to avoid being red flagged is you should just report all your income.
Always report all your income. Always.
Okay. What about cash transactions?
Yeah, I mean, like, by the letter of the law, you got to report that stuff for sure.
Is there a way for them to track that? Like, because I've thought about this too. Like at card shows, there's a lot of cash that goes back and forth, right? And I just wonder if you're making cash, unless you just kind of keep it under your mattress or something like that, or you're just like turning it into cards again and turning it over. If you deposit cash in a bank, is that going to be a red flag?
It's not going to be a red flag that you deposit it in the bank, but you're right. The IRS doesn't know about cash transactions, right? If you're comfortable, and don't claim it, that's, it's a gamble. But if they do come back to you, they can absolutely request bank statements, and they often do. And so in a weird way, they might be able to trace most of it back.
Right. And so you're going to have to explain it, right? If you show your bank statements and you have these cash deposits, you're going to have to explain where that came from. And if you can't, is the presumption that you made that money and they're going to tax you on it?
Yes.
Oh, wow. And you said like 25%. Is that because that's the tax bracket, or is that the penalty?
So 25% is like a typical married filing joint, like middle income household kind of blended rate that we use as a general rule of thumb, just to like throw out equations. So
okay.
it's kind of like in the middle of the road, so to speak.
Okay. All right. I noticed that we do have some comments here. I will get to the comments, guys, at the end of the show. If you have a pressing comment, just throw up a super chat sticker and I'll get it right away. If not, I will try to, if we have time for James, he's allocated about an hour and a half for this interview. So if we have time, we will definitely get to your comments towards the end of the show. But just to kind of go back to this point about reporting income. So, I think I know the answer to this, but I'm just going to ask you anyways. Would you suggest as a professional that it's better just to report all your income no matter what, and then the way to kind of mitigate the tax consequences of that is to offset it with all the expenses that you're supposed to be keeping track of?
Absolutely. Yes.
That's the best way to do it, huh?
I tell all my clients, I go, look at claim all your income, right? Because at a point, I don't know if it's a $600 1099, that's not a big deal, but to a point, the amount of money, if you were to exclude it from your tax return, could be considered fraud. Okay. And that's a big deal. You don't want to go into that area. Where you take advantage of the tax rules is in the deductions, the expenses, those kind of things. Those rules can be gray sometimes. So it's okay to be quote unquote aggressive, or as aggressive as you feel that you're still living within the rule. But my general rule of thumb is just never mess with the income.
Interesting. Okay, so let's get to that, because I hear stories about like professional athletes or other people that get in trouble all the time for tax fraud, right? Because they don't pay taxes on their income. What point is that? Is there a magic number? Like if you don't report 50 grand, is that the magic number? Or is it 10 grand? Or like what would get you in trouble?
Yeah, see, I have no idea, and I haven't had a client hit that yet, thank God. And I try to keep people out of that bucket. But yeah, people talk about rules of thumb with the IRS. I don't know how many clients I've had sit across and say, well, like if I say this number, is that over the percentage or below the percentage? And if they have that, it's a deeply kept secret. And there's a lot of retired IRS agents that become like tax, the guys that get you out of like back taxes and stuff like that, right? So you have like these old retired IRS agents that go into like tax, like, oh, I owe $1 million, please argue it for me, right? None of those guys have published a rule of thumb like that. So I don't know that there's any specific number.
So is it like, so what constitutes like red flags for somebody? Like, because I've always thought, right, if like I've always personally been worried that, I would get audited for not reporting, like let's just say if I didn't report $20,000 of stuff, right? But then I've been told by other professionals that there's people that are high audit risk, and then there are people that are very low audit risk. Is there like different categories that people fall in? Like, did the IRS always go after like the millionaires, or do they go after like the low-hanging fruit people that are W-2 employees? Or what's your experience with that?
Yeah, again, like I almost have no experience with that. I've only had a couple clients get audited. I don't, judging by like news articles, right? They're like, oh, we hired 86,000 new IRS agents, and you read articles. No matter what you pull up on the internet, you're going to find an article like the IRS is going after home office, or the IRS is going after S Corp compensation, or automobile deduction. There's like a news article every day about what they're going after. So I just say, look, let's keep you, like pretty clean, and like move some things around to take advantage of the rules the right way to minimize those taxes as much as possible. And it's good to be aggressive. There's some famous, like Thomas Jefferson, something like that, said, no man shall pay more in taxes than he owes, right? Then that gives us the ability to take advantage of those rules. There's no reason we should pay more in tax than the rules require us to pay.
Okay, so this is an interesting point I want to kind of bring up here. So I think a lot of people have this initial reaction that I want to avoid paying taxes by not reporting my income, right? That's like conventionally, that's how I think a lot of people assume that's how it works. But
Sure.
you keep mentioning you want to be aggressive with the deductions and expenses to report. You're saying you need to report all income, but you want to be aggressive with your deductions and your expenses that you're going to report. So is that different? Like, let's just say you made $10,000 in sales, gross sales, and you wrote it all off. You actually took a loss. You said you had $11,000 of expenses, right? Like, so what happens if you do that and they see it? Do they like, and they come after you and they ask you for your records? What happens if they say, well, you can't take $11,000 off? Like, do you still get penalized in the same way?
Not in the same way, but say they took a look at everything and they said, well, we don't agree with $1,000 of your deductions, right? So we think you should have paid, again, 25%, $250 in additional tax. And then if you can produce a record that sways them, then you can, but otherwise you got to pay the $250 in tax. But there's no reason not to rub right up against the envelope, especially if you feel like you're entitled to that deduction.
Would you be in a stronger position to make that argument if you reported all your income and they can't say, well, we got you red-handed, you didn't report this, versus you reported all your income and then they said, but you took too many deductions when we looked at your, are you like in a better, like a higher moral position to make that argument?
Yeah, because a lot of the rules are up to interpretation. On income, it's not. Claim your income. That's it.
Right.
Every dollar of income, it's like a certainty, you know. Certain deductions, like the home office deduction, right? Like, are you entitled to it? Well, if you don't have a principal place of business and you conduct your business out of your home, then you're entitled to it. And so you take advantage of that rule. So if they don't agree with you taking your home internet expense for your home office, then maybe you split the baby, right? Maybe it costs $1,000 a year for internet, and they come back and say, well, you know, there is some personal use in there. Let's cut it in half, $500. And then I'd say, well, that's interesting, but I cannot conduct my business without internet. I can conduct zero business without internet. My business requires internet. The fact that I use it to stream Netflix at night is a bit of a benefit, but my business cannot operate without internet. So you see how it can be a little gray. You can make arguments and positions for yourself. And I feel like, you know, if I cannot conduct business without internet in my house, then I would take the whole internet expense.
So you can negotiate expenses and deductions, but you can't negotiate income.
Not really.
I can't say this 1099 that I received from eBay that's not really income.
Right. I mean,
right?
If it really isn't, there is a method to go that route. But if it is, right?
Yeah.
Yeah.
Interesting. Okay. So
Sorry, I was just going to say, I have had a client that got a faulty W-2 one time, and it was a real pain in the butt to fix, but he didn't get it, you know, so.
Mm-hmm. Okay. So unless it's a mistake that you got issued a 1099 by mistake, you're not in a position to argue that, versus if you report it and you just take a lot of deductions to be aggressive and try to offset it, you can negotiate that if you get audited by the IRS.
Absolutely.
Okay. All right. So I think we're talking about like in the position of if you're just casually selling things on eBay, or you're just doing a few transactions here or there, right? But what if you get to like the next level where most people kind of operate in the hobby, I would say, where they're doing regular transactions. They might not be doing this as their full-time business. They might have a job or something else that they're doing, but because of their skills that they've developed in the hobby, like myself, for example, you're making money. You're making a good chunk of change in the hobby, and you have to report it in a certain way. So you mentioned like home office and things like that. Is that like, do these people report it as like a side hustle or like a small business, or like what do you recommend in a situation like that? Like you're making more than like 20 grand a year doing this stuff.
Yeah. So when when eBay or PayPal, Venmo or whatever, when they issue you a 1099, that's supposed to be included on what's called a Schedule C, which is the profit and loss from a sole proprietorship. So when you have to fill out that Schedule C, there's other deductions that you can take. Like I said, your internet, possibly your cell phone, possibly your vehicle to an extent, going show to show. There are a number of deductions that you open yourself up to when you fill out a Schedule C.
So rather than just kind of reporting a little bit of income because you get issued a 1099, if I'm hearing this correctly, if you report it as like you use like a Schedule C, right? Are you basically saying that you have a side business, and if you report it as a side business, you're entitled to more expenses and deductions like your car, your home office, and things like that?
Yeah, basically. I mean, even theoretically, even at your other level, like your lower level, the 1099, you're going to put it in your tax return. It has to hit a Schedule C somewhere. And that's why I'm saying that even on the smallest level, your basis is your first good deduction. Beyond that, you just have to pick and choose what is legitimately running my business. So again, on the small level, you might not have like a lot of travel going to shows. Like you're really just selling out of your home, things like that. You, for instance, you're all over the planet, and including shows in Dallas and all over the place. You can take travel expense against that. So again, it's really up to, does this expense, is it ordinary and necessary for my business? And that's basically the letter of the law rule or line that you have to draw. And so even on the small level, there are things you still can deduct. It just might not be as extravagant as like travel and things like that.
So there is no like minimum threshold to get you to that next level where you can take more of these aggressive deductions?
If it's basically just the 1099 income, that's accurate.
Okay. So anytime you sell online, we're just going to assume that you're going to get a 1099 from selling online, like on eBay or any type of auction house or anything like that. If you have well, I guess nobody really has a website or anything like that. Mainly in the hobby, people either sell online through the auction houses or eBay, or they do online transactions from like Venmo, Zelle, PayPal, or they sell at shows. That's
Right.
pretty much the way most people transact. So anybody on any of those levels, they can still take advantage of most of these deductions if they can justify it as an ordinary expense for their business.
An ordinary and necessary business expense. So for instance, like on the eBay level, say you're just selling eBay, like you buy a light box, right? To take like better pictures, that would definitely be an expense to that guy in that year, right? Now, like traveling to go to like the Dallas card show, you're kind of a spectator still, right? Like you're not at that level, but if you're going to set up a booth, like that's business, right? So those are like the different levels, so you kind of have to gauge what expenses can I justify for the level of business that I'm doing.
Okay. So like Dallas card show, for example, that's great example to talk about here. So if I'm going to that show, I can write off the plane ticket. I can write off my hotel, the table cost. Can I write off like meals?
So, yeah, I mean, to the extent that you're doing business, say you go and you take out like Merleworld, right? And you guys are like talking business, and maybe like the owner of Veriswap joins you guys or whatever. That's business, if you go and again, that could be limited to 50%. Typically, historically in the past, meals and entertainment was capped at 50% because the government's like, you can really take advantage of it, right? So it's typically capped at 50%. Now, like if you're grabbing like an Egg McMuffin in the morning on your way to your trade show, like maybe leave that one off the books. But
Okay.
if you can justify, like this is like substantial business, right? Like absolutely deduct it.
Okay. Is there like a certain level that people, because you said that people on the lowest level can take advantage of these write-offs, these deductions. Is there like a certain level that you get to where you're just too big to do that, and you should be looking at other tax structures like a corporation or an LLC or something?
Absolutely. The LLC is a bit tricky, right? I would say the LLC depends on your state. Okay. So in California here, our LLCs have a minimum franchise tax. It's like a fee to do business of $800, right? It's kind of a lot of money for what you're getting out of an LLC, because for tax purposes, an LLC is no different than that Schedule C we already talked about. They're like one and the same. But once you get to a certain level, and I usually say that that's about $80,000 net. And when I say net, that's after that plane ticket, after your cost basis in the cards, after all that stuff, 80 grand net, then it may be beneficial to become an S corporation.
Okay. And then is there like more benefits to doing that? Like, do you get more write-offs, like access to more deductions and things like that?
Let me think about that. Well, yeah, if you can show that you're like a business, if you're doing the number of transactions a year that would constitute like, okay, this is probably equal to 50% of my working life, like a substantial amount of transactions. We could do what's called cash basis accounting, right? So instead of taking a card for $100, it cost me $50, my profit's $50. You're going to recognize the $100 as it comes in, right? But then you're going to recognize your inventory as you pay for it, right? So let's say you sold $50,000 worth of cards, but that year you were bulking up on inventory and you decided to buy $75,000 worth of inventory, then you'd have a $25,000 loss that year. So instead of taking the card's profit less its price, and then that's what you claim the expenses and income as they occur regardless.
Okay, this is that. I don't know if you guys picked this up, but that I think he just dropped a huge nugget of knowledge right there. So let me see if I'm understanding this correctly. Okay. So up until this point, we're talking about like we're looking at everything on a single transaction basis, right? I bought this car for $100. I sold it for $200. My profit is $100, and I offset that by the expenses associated with that transaction, the grading fees or whatever. And that's how I can offset that to maybe mitigate the tax. Right. But,
right.
and anybody can do that on the smallest level. They're selling dollar cards to whatever level, for most people, they sell at shows, they sell on eBay, things like that. But then you said that if you get to a certain level where you're doing, like, you used $80,000 as a threshold, right? And you have a real legit business, you have a LLC attached to it and everything like that, you get access to another level to offset your profits, where you're not necessarily reporting everything as a single transaction, but more like a whole yearly picture, right? If you make $100,000 of profit from all these number of transactions per year for that year, but you buy $150,000 of inventory that you still have, you can capture the cost of that inventory to offset the expenses.
Absolutely. You're almost like a dealer at that point, right? Where you are buying inventory and selling inventory, and you just realize it in the year in which it occurs. Now, if all that happened, that whole cycle happened within a 1-year period, it would all be the same, right? But it's taking advantage of those bookends, the beginning of the year and the end of the year, where you can do a little tax planning and say, oh my gosh, this is a really big year for me. I'm going to have a really big tax liability. Well, maybe by the end of the year, you should buy a bunch of inventory, which would be expensed in that year. Now, unfortunately, it's going to catch up, right? The next year, you got to sell it and you got nothing to offset it with unless you keep buying and buying and buying. So over the long run, it all washes out. It's all the same in the eyes of the IRS. It's just to be able to take advantage of that method, you kind of have to show that like this is a business. This isn't like a side hustle. This is, a pretty legitimate portion of what I do.
And you're saying that like if you get up to like that $80,000 of gross sales, that's like the range that you could justify something like that?
No, earlier I was kind of giving the rule of thumb on whether or not you want to be an S corp, and that is 80,000 net.
Okay.
Right. When you're making 80,000 net, it might be a good idea to be an S corp. But let's put that aside. That's like a whole nother tax strategy, and it doesn't really have to do with this topic. This topic's kind of more relevant and important. But I would say, you could look at it a couple ways, right? You could look at it as your number of transactions. If you're doing thousands of transactions a year, right? So you're even like a dollar card guy, you're doing thousands of transactions a year. That looks like a business, that doesn't look like beans. So
Not like a side hustle.
Right. And then on the other hand, maybe it's dollar volume, right? Like maybe it's tens, 50s, hundreds of thousands of dollars a year. You're like, okay, well, that's got a for-profit motive. That's a business, as a side to, as opposed to like a side hustle.
Okay, so this strategy may not apply to everybody if you just do a few transactions a year or you just work on a very small scale. But if you get to the point where you're going to multiple card shows a year, you're doing multiple transactions, and you're netting a substantial amount of money from this, then you can take advantage of that tip where you can offset your profits by buying inventory.
Absolutely. And I'd say if you're going to shows as a vendor, that you're buying a table, even if it's just to sell like dollar boxes or whatever you're doing, like if you're going to a show and buying a table, that looks like a business to me.
Even if you only do it like a few times a year, like 4 times a year or something?
I mean, if that's all you're doing, maybe not. But if you're doing that and then you're selling on eBay and you're doing it year round, I would say that looks like a business.
I would say most people that I know are running it as a business for sure. Yeah. They may have a day job, but there are definitely, there's a lot of hustlers in the hobby that are doing card shows every month and have eBay stores that have active listings and things like that. So that's interesting, guys. If you were listening to that, I think James just gave you the key to writing off your profits right there. If you can understand that. One thing I want to clarify on this though, because I know there's going to be some idiots that misinterpret this, is that you said that if you buy a lot of inventory 1 year to offset the profit, you only get to offset it that year. The following year, if you sell those cards, you don't get to subtract that from the cost basis.
Right.
Because you only get the previous year.
Yeah, you only get that deduction one time. And it's not like one time ever in your lifetime. I'm just saying, if I bought a case, right, like a case of cards that I was going to like piece out booster boxes or something like that, right? And I bought a case on December 28th, that would be an expense in that year. The next year when I sell it, I got to take it all, right? Like I can't write off that case ever again. That's
even if you sell it for a loss, you don't get to write it off as a loss.
No, I mean, the way it would happen was I bought a case this year, 2024 in December for, $1,000. And then next year, I only made $800. This year I would get $1,000 deduction for buying inventory. Next year I'd get $800 of income. So it's almost like if you combine those 2 years, you took the loss, it just happened in 2 different years.
That's interesting, guys. So pay attention to that. You don't get to like double dip on deductions here. But if you find yourself in a situation like I'll share this. If I find myself where I've made more money than I thought I would make, and I have, as I do my tax planning towards the end of the year, I see that I'm going to have a big tax liability the following year. I can take advantage of this and try to offset that tax liability by buying inventory for that year. But in the following year, whatever I sell it for, even if I sell it for a loss, I still have to report that as the gross income on that because I already took the deduction.
Right.
Interesting. Okay. All right. So that gets us to my next follow-up question here is you mentioned so if you get to that category where you go from just being a casual seller to now you're running a side business or a legit business where you're taking advantage of these more aggressive type of deductions. Now you talk about tax planning. Okay. I think most people that I know maybe don't practice tax planning where they just basically in March, they'll call up their tax preparer, whether it's TurboTax or a real CPA, or even they just do it themselves, right? And then they'll just think of the tax. They'll think of doing their taxes of that window period, between March and April, right? But I've known you for several years now. We've practiced this ourselves where we do tax planning towards the end of the year in the fourth quarter, November, December, so that we know what's going to happen when we file taxes for the following year. And if we find ourselves in a situation where I have a huge tax liability, we can still have time to try to find ways to offset that, right? That's tax planning.
Absolutely.
And so why is that so important? Because if you don't tax plan at the end of the year, what options do you have if you're filing your taxes in February or March and you're like, oh crap, I have to pay X amount of dollars. James, what do? I can't pay this much. What can you do in that situation?
Yeah, there's almost nothing, right? The door is closed. There's very few things you could do, right? Some self-employed business owners, they could still contribute to their SEP IRA, right? Or their IRA plans up until their filing deadline, but that's it. And those have limits, right? So there's only so much you could do there. Second, the rules change all the time, right? Half my job is education and making sure I know the rules because there's a lot of CPAs out there that will take your shoebox full of junk at the end of the year, put the numbers in the boxes, and you're stuck with what you're stuck with, right? I hate that. I want to plan with people. It's maybe a conversation for another day, but that whole S Corp conversation, whether I'm an S Corp or not, you're shifting money from one pocket to the other and saving tax dollars in the process, right? So if your CPA is not asking you, how are you organized and how does the money flow and things like that? What about this? What about that? Then they're just preparing a tax return, right? They're just putting numbers in a box. And so it's important to get together third, fourth quarter of the year after you're okay, I kind of think I have a picture of what this is going to look like so that we can deal with things before the door is closed. Because once 12/31 hits, you can't go back and buy an electric vehicle, right? Or whatever it is that you want to save. So yeah, it's really important that you meet with somebody towards the end of the year.
So you would recommend this tax planning as a matter of practice in everybody's routine. Is it for every level, or is it just that higher level that we're talking about where if you have an LLC or S Corp or whatever?
Yeah, again, you kind of have to look at your own situation, right? What does my 1099 really look like? What's it going to cost to go talk to somebody? It could be a couple $100 an hour, right? And so if you're looking at $1,000 1099, the total tax could be less than $200, So you're not really concerned at that level, unless you have a lot of other things going on in your life. Maybe you have another business or a restaurant or apartment buildings, anything like that. If you're more complex, but again, you just got to gauge your level a little bit. It doesn't hurt to talk to somebody. It doesn't hurt to maybe reach out and have somebody review your last tax return just to let you know, is there anything maybe I could have done or that jumps off the page at you? But Yeah, like when you're starting to make substantial money, right? Like 6+ figures, and I'm not just talking in the hobby, I'm talking like combined. It's good to talk to somebody, even like a H&R Block, like a higher level of like, I'm going to walk into the office and, meet with somebody this year. Like, it's probably
Well,
a good idea.
I'll tell you, I know many people in the hobby that make like way like high six figures in the hobby, and a lot of these guys are like young. So I just wonder if they have the presence of mind to even consider hiring a tax professional to help them out in this, or if they just, kind of wing it themselves. But like, I guess like one question I have for you is, are like all CPAs equal? Because you mentioned people that like just kind of put something into their program, and some people are like just tax preparers versus a CPA. Like, so what's the difference between somebody like yourself versus, um, I don't know, a TurboTax or something like that?
Yeah, I mean, it's honestly, it's kind of just an individual by individual situation, right? Like, I have clients that come to me that said, I was with my last guy for 35 years. He retired, whatever it is. And the return will look great and they're set up perfectly. Sometimes it happens and it's like they weren't really trying to help anybody out, right? They're trying to just get through tax season, like, again, put numbers in boxes, get it over with, shove it out the door, keep you out of trouble, but not save you any money, like they're not looking at the full picture, right? So I don't like to say like they're bad CPAs or whatever, but they're just not like they don't care, So you could find somebody at TurboTax, like awesome, you never know. But just find somebody that's asking questions like, what does your whole family picture look like? What are your goals? Like, what do you see for, like make sure they're asking some questions.
So like, so you mentioned like somebody at one of those places like H&R Block or TurboTax or whatever, where they're just there to prepare your tax filing. They're
Right.
not. They're going to take your 1099s, your W-2s, and they're going to input your information into their software, get your filing done, and then move on. Right?
Exactly.
They're not there to make sure that you get all the deductions that you should be taking. They're not there to do tax planning. They're just there to get your filing done.
Right.
Versus somebody like yourself in your own practice, you would encourage tax planning where you can have the conversation, go back and forth and be like, okay, this is where your tax looks like next year. This is what you can kind of do to offset it today. How aggressive do you want to be? Things like that, right? You take a more active role with your clients.
Absolutely. And that's like, I'm not the most expensive guy on the block, right? But I'm also like not cheap sometimes in some people's eyes. So I feel like what people really pay me for is that expertise, right? Like, hey, why haven't you done this yet? Or hey, have you thought about like a retirement plan? You have all this extra money at the end of the year. Like, let's deduct some of it. You know, it, I feel like anyone can put the numbers in the boxes. Anyone can go online and snap a picture of your W-2 and kind of go through the process. But it's the people that know the rules, that know how to I don't want to say play the games, but it's play the games, right? Like that know the ins and the outs to be able to shift things around to save the most tax dollars. Like that's what you pay a good CPA for.
Interesting. Okay, so you since you brought this up, you said play the game. This is something that I've talked about for a while, where I've encouraged people to kind of like learn their taxes, learn the tax game, right? So is it really like that, where if you know the rules, then you can minimize your taxes as much as the rules allow. But if you don't know the rules, then you're just going to be stuck paying the max each year. And that's kind of like where most people fall into that category, because they don't know the rules or they don't work with a tax professional like yourself that can advise them.
Yeah, I think a lot of people do fall in that category. And, like when I say play the game, like for instance, we were earlier talking about whether or not to be an S corp, right? And it's the perfect example. If you have an LLC that makes $100,000, you're going to get charged with this thing called self-employment tax, right? And self-employment tax is the same thing as payroll tax. They equate to the same thing. Now, a business owner, they own an LLC, but they don't get a W-2 like a regular worker, right? And the government doesn't think that's fair because a regular worker pays payroll tax. So that business owner has to pay self-employment tax. Same exact thing, right? Now, when you move into the S Corp level, you have to pay yourself a salary, a W-2, like a regular worker, but then the rest of the money that you make, the profit that you make, is not subject to self-employment tax, right? So let's say that same $100,000 situation, you have an LLC, they're going to pay 15.3%, so $15,300 in self-employment tax. The S Corp, you pay yourself half, $50,000. You've just cut that 15,300 in half, right? So now you owe like $7,800 in SE tax, but the remainder, that's just distribution to you, and you don't have to pay payroll tax. So if someone's not asking the question, you're an LLC, you're making over like 80 grand a year, why aren't you an S Corp, right? You could save like $7,800 in tax just with that one move. And that's what I say playing the game, like shifting things from your left pocket to your right pocket. Like questions like that can save substantial amount of money.
Okay. So to take advantage of a professional like you and to play that game and to leverage your knowledge, like for somebody like you in your practice, do you only work with like high net individuals, or do you work with a certain threshold of people that should seek out your type of professional service?
I will definitely tell people I'm going to be too expensive for you, right? And that's not a lot of people, and it's probably not a lot of people in here. But if you're like, like a waiter, and you make like a W-2 and you come into my office, I'm going to say, look, like I can totally help you, but I don't want to rip you off. Like you should probably just go use TurboTax or whatever. So in that sense, I don't turn anyone away, and I don't say I'm too big or too good for anyone. But I will let you know, like, if maybe I'm not the right fit, right?
Mm-hmm.
And that can mean a lot of different things. So you could have a guy that's not that big in the hobby, but have a big W-2, right? That's still someone that might need a little help. So there's no specific criteria, but if you think, typically my minimum tax return is like $800. I typically don't charge for easy phone calls and questions. Like, if you call me up and say, hey, like if I bought a car, what could I deduct? I know that off the top of my head. I wouldn't charge you for that, So like, it's just a personal decision. Like, is it worth $800 to this guy? Will I save enough that it matters? So it's really a personal choice, to be honest.
I can tell you, I can tell our viewers here that from my own personal experience, I send James emails all the time. I call him up all the time. So I'm always asking him questions. Hey, what can I do to, can I write this off? Can I deduct this? So I definitely try to take advantage of your knowledge as much as possible. So I definitely think it's worth it, because I can say just from my experience that I've saved a lot of money in taxes over the last year since I've been using your services and we've been doing our tax planning. And for me personally, I mean, if it's between me paying taxes to the IRS or me paying your professional fees in order to save the taxes, I'd rather just pay you. If the net positive is still in my favor,
Yeah. Well, and at the end of the year, if you need an extra deduction, I can always just send you an extra invoice.
Yeah, see, so that's another way to do it, guys. So here's one thing I want to ask. I feel like a lot of people, maybe they think of taxes in a very black and white or very linear way, where this is the money I make and these are the certain deductions that I can take, right? But I know from my own experience and all the tax planning strategies that we've kind of talked about, where I can write off my content. Right. If I want to claim a content business and call myself a content creator, if I want to call myself a dealer, I go to shows and set up as a dealer. If I want to start a supply business, or if I want to start like a Saturday morning cards, I can write off those. Right. So there's many different ways that you can write off expenses in the hobby in different forms. So I've got two questions for you. Number one is from your recent, dive into the hobby where you've been learning, and collecting and things like that. Is there anything that kind of stands out in your mind as interesting ways that people can write off things that are maybe not available to other businesses? And then the second part of that is, we've talked about this several times, but like, what can you explain like the hobby rule for our viewers? And I'm not talking about the hobby of cards. I'm talking about the actual term of art for IRS, the hobby rule.
Yeah. Okay. So the first part, re-ask that question one more time.
So you've been diving deep into the hobby. You've been watching all the Between Two Slabs episodes. You've been binging everything. You're a piggy banks collector now. You're a Saturday morning card collector now. So now that you're in the hobby and you are seeing how people transact and you buy into breaks and all these kind of things, right? So you kind of know our world a little bit. Is there anything that you see that is unique to our hobby that other industries or professions cannot take advantage of? Like if you're I don't know, just a professional, worker getting a W-2, or if you're a mechanic and you own a shop, is there like anything that's unique to the hobby that we can really take advantage of in terms of tax planning or deductions that normal people could not normally do right off?
I mean, again, if you're becoming that level of like, I'm doing trade shows every weekend. If I am seriously looking like a business, I do think there's opportunity to like buy opportunities at certain points to write off certain tax liabilities. And it's an interesting way to look at things. And I think it might, evolve a bit as this eBay like 1099 rule comes out and people are like, okay, well, I'm either just going to not do this anymore and just stash up my personal collection, or I'm going to jump in even stronger because I need to be able to like deduct this kind of stuff, right? Like I need to deduct inventory at the end of the year. So I think it's kind of evolving and interesting.
Okay. Let me ask you this follow-up question before I get to part two there of the hobby rule. What happens if like people do trades? How do you keep track of like your records for trades?
Yeah, that's a really interesting question. I mean, I guess at the smaller level, if it's not an even trade, right? Like one card for one card, then you'd have to like somehow yourself allocate, the cost of your prior card to the two, so to speak, right? So those two might not be equally valued, right? One might be higher than the other. So I would say just be careful in like allocating your original basis to the new cards, essentially. But I don't think that transaction in and of itself creates a taxable event because you didn't accept any money.
So as long as you keep good records and you know the cost basis of that card and you can track it through how many trades you have, then you can still accurately report it as either income or as a loss or whatever.
Yeah. And I mean, you do bring up a good point, right? Like maybe try to stick to just trading, right? Because it doesn't create income that eBay or Venmo or PayPal can hit you with a 1099 with, right? Like use it as your currency, so to speak.
Interesting. I suspect a lot of people do that on a very high level, because there's a certain level of the hobby where there's like the one percenters, right? Where they have 6-figure cards that they'll trade each other for and things like that. I suspect it's probably because they don't want what you call like a taxable event, right?
Right.
And they just want to like store their money in that card as an investment and just kind of hold on to it until they're ready to cash out at some point.
Yeah, I mean, like that Logo Man card was crazy. And you were mentioning one last week, like a $900,000 Michael Jordan rookie card, right? Like, and you were suspecting the same thing, right? Some sort of tax, money washing scheme, something like that. I mean, my gears started turning too. Like, I mean, you wouldn't want it public, but you can't carry more than $10,000 like overseas, right? I mean, but who's to say you can't carry a $1 million Jordan card in your pocket?
So that's interesting. Let's talk about that Jordan card real quick here before we get to part 2 of my question. So that Jordan card sold for almost $3 million.
Yeah.
So the person that sold that, right? I'm going to assume that he had a very low cost basis because that card had not been seen for like 20 years, basically.
Yeah.
So his cost basis is very low on that. He sells it for $3 million. Unless he's a total idiot, which I'm sure he's not. What does he do to offset that?
Yeah,
so he doesn't pay tax.
The only thing that I really thought of is like back to like this collectible rule, right? And for our purposes, we like to stay away from the collectible rule, but the collectible rule says all collectibles as a capital gain are to be taxed at 28%, right? So again, if you're in like a 39% tax bracket, a 28% capital gain is like a break for you, right? Like that's actually like 10% less than you typically pay on your income. So who knows?
So that could be one option where he could take, if he has a higher tax bracket, then he's actually saving a little bit of money in tax if he just cashes out right there. But is there like, could he take that $3 million and then go and buy $3 million worth of cards and offset it?
I mean, if he's like a dealer, yeah, but he doesn't sound like a dealer. He sounds like a collector for sure.
That's insane. Okay. So on the other side of that, the guy who buys that car for $3 million, does he, let's just assume that he's a dealer too, right? At that high level, he must be like a high-end collector or dealer. Does he get to write off that as an expense for this year?
Again, if he's acting like a business, like a dealer, then yeah, he can write it off. But if he's just like a collector, like straight up, I just want this for my collection, this is not a for-profit motive, he's going to have to wait till he sells it to take that deduction.
So he gets no benefit this year if he's in that category.
No.
What about like I've heard like people that maybe they'll sell their business, whatever it is, and they'll cash out and they get like $5 million for their business. And then they want to reinvest that into investments like art or things like that. Does the hobby fall into that category at all?
No. And we don't, it's a very gray line, right? The IRS defines a collectible as artwork, rugs, metals, gems, a couple of other things, and then quote unquote, any personal tangible property that we want to include, right? So until they come at me and say, like, your trading cards fall under that category, they don't, right? So that's the world that I live in.
So trading cards do not fall into the investment category like artwork.
As of right now, they don't, and I think it's probably beneficial for almost everyone here that they don't.
Like what's the difference between if it is classified as a piece of art versus a collectible?
In the eyes of the IRS, I have no idea, but they could just say, well, we're going to consider it artwork, and then you have to pay that 28% rate. And all you can take against it is your basis. You can't take all those other deductions and everything, especially if you don't rise to the level of like, I'm a dealer.
So, okay. So it's better for it to not be in that collectible category.
Right.
It's better for it to be as part of inventory of a business.
Exactly. And it's consistent with the way eBay, Venmo, and PayPal 1099 you. Otherwise, they would have to consider that a capital gain transaction, but they don't. They consider it miscellaneous income. So it's more like it's got to be reported on a Schedule C for a sole proprietorship rather than a Schedule D, like a sale of a stock, for example.
So if you like, I'm glad you brought that up. So if you compare this to like stocks, so there's like short-term capital gains and long-term capital gains with stocks, right? If you hold it for shorter than a year, you have to pay higher taxes versus if you hold it for longer than a year.
Right.
That does not apply to trading cards if you're doing that method where you're taking the cost of it to offset your profits in that same year. Those are those are two totally different categories of reporting the income.
Right. Exactly.
Okay, and it would just depend on each individual's situation whether they should be reporting it as more like a stock or as an active business.
Yeah, so I mean, if you're claiming a 1099 from eBay, Venmo, PayPal, things like that, then I wouldn't consider it like a stock, right? Because you're getting this 1099 for income, like a sole proprietorship. But if you're buying and selling like a $3 million Jordan card, the IRS is definitely going to say that's a collectible. That's not in the hobby, toy, and gaming category of a business.
Interesting. Okay. All right. So let's move on to the second part of that question where we talk about the hobby rule. Because I think this is very interesting that not a lot of people understand this and not a lot of people, know about it in order to take advantage of it. But can you explain to us, like, if you're an aspiring entrepreneur, you're getting into the hobby, you're flipping cards, and you're starting to make a little bit of money, and you decide you want to start doing it as a full-time side hustle or just even your full-time business. What is this hobby rule that you can take advantage of for the first few years?
The hobby loss rules?
Yes.
Yeah, typically they work against you, right? And it's the IRS basically saying, and the way I like to often describe it is with like a guy with like his car, right? And he takes it to like a car show every now and again, right? Puts tens of thousands of dollars into this car, right? Parts, all that kind of stuff, working on it. Goes to one car show and he gets like a blue ribbon, like no money, like maybe $100 or something like that. You can't take a loss of all that money and effort that you put into that car because that's like a true hobby, right? You're like literally making nothing on it. You're never going to make a profit. Now, on the other side, if you do make money, you can write off up to the amount that you made in expenses. So the car guy that made $100, he can write off $100 of expenses. That's it. If you're looking more like a business, right? Like you have a lot of transactions, you look more like a business. You can take losses for about is it 3 out of Dan? You
I stumped you.
Yeah, you did. 3. Okay, you have to have a profit 3 out of every 8 years, right? Sorry, brain fart. You have to have a profit 3 out of 8 years. The government doesn't expect every starting business to make money right away. It happens. You take losses. Look at Elon Musk, right? Like millions in losses. So they're not against you taking losses to start your business, but eventually they're going to want you to make a profit. So they say like 3 out of 8 years, you got to make a profit.
Okay, so like if you just start out the business, right? We talked about this in the early stages of this discussion where you're starting out, you're making a lot of money, right? Because of the hobby, just the nature of the hobby. If you know what you're doing, you can make a lot of money, but then you can offset that profit by buying inventory or taking advantage by doing aggressive deductions and expenses and things like that. And you can actually either zero out your income or even take a loss, report it as a loss if you reach a certain level where you're reporting it as a business. And from this hobby rule, where you can continue to do that for a certain number of years before the IRS says, hey, is this a hobby or is this a real business? If it's a real business, you need to report income. If it's just a hobby, you can only take losses for a certain amount of years.
Well, if it's a hobby, they're going to go disallow all those losses, even the prior ones, right?
Okay. I see what you're saying. So you're saying like if you run it if you run it as a business, but you continue to take a loss, at some point they're going to be like, it's not a real business. You can't write off all these deductions. It's a hobby. So you need to pay taxes on it.
Exactly. Right. So, and that's why it kind of, we say like, oh, maybe at the end of the year, you buy a bunch of inventory. It's going to catch up with you next year. That's natural, right? And you should allow it to happen because you do want to have some profits in certain years. I mean, a for-profit business definitely makes a profit every once in a while, but you try to minimize that profit as much as possible. And don't quote me on this, but I've literally heard stories like in my education, like CPE, like online continuing education, where like a practitioner's like, I've run across a guy that put down just $1 and like, he doesn't even, calculate the rest of it, but he just makes it show $1 of profit. And he's like, you got to do that just to make them happy. And I'm like, all right, that's pretty aggressive. But the point is eventually you got to pay on a profit. But, if you have other things going on, right? Like say you do start content creation, right? Maybe that's a perfect year for you. You get a big profit off of selling a big card, right? Start your content creation business. Go travel and put 1 million videos up, right? Maybe that business doesn't work out, but you don't know unless you try. So you can take those losses against that big income that year. So again, part of tax planning, right? Like if you're looking at like, oh my God, this year is going to be gangbusters, I'm going to owe a lot in tax. Maybe start thinking about another little side venture, something like that to offset it.
Okay. I don't know if you guys picked that up, but that was another golden nugget of knowledge that he just kind of dropped on you guys there. So just kind of going back to what we were saying about the hobby rule, you don't want the IRS to classify your side hustle as a hobby because they won't allow you to take all these deductions and stuff.
Right.
You want to make it look like a legit business and then be aggressive with as many deductions as you're allowed to, right?
Right.
So that they look at it as a real legit business and you can take advantage of all the rules that apply to that.
Absolutely.
Right? Okay. But you also said, and this is important, guys, that if you have a very successful business, let's just say you set up at shows, you're a vendor at shows and you're making a lot of money, you could potentially, within the context of the hobby, start another hobby related business like content creation or something else. Like, let's just say you start a show promotion or something like that, right? And that could be used to offset the income from being a vendor.
Absolutely.
Interesting. Okay.
Go start a card company.
Yeah. Hey, that's my idea, guys. Nobody's doing that. Okay, that's my idea. But okay, so that's interesting. Okay, so I think that's a lot of knowledge that James has dropped on you guys. I might try to summarize a little bit of this, but I do want to. I'm looking at the time here, so I do want to be respectful to your time, James, because I do appreciate you coming on to talk about these complex subjects here. So, but I do see a couple questions. I just want to try to get to some of these questions here. So I'm going to put you on the spot. All right. Somebody from Instagram, they asked, is it possible to buy like an expensive card as part of advertising and write it off as an advertisement? So they didn't give much context, but I'm just off the top of my head, I would say, like, let's just say for my other business where I have a lot of clients and I want to do a promotion where I buy a card and I give it away as a promotion, kind of like what you did with the SMC cards. You gave it away, right? Can I write that off as an expense?
Yeah, I think so. Like in the right context. And as long as you stick with like a business purpose, I don't see any problem with that.
Okay. So as long as you don't abuse it, right? But you could do like maybe a one time or just a couple times a year, you can write off. You could buy a card and either you use it to get you PR, or you could give it away as a gift and you can write that off as advertising.
Yeah. And like, if you think about it logically, right? Like you're at the level of a business, you bought this card, whether it's inventory, marketing, a decoration for your office, that's an expense. If you're going to sell it later on, you're going to have to claim the income with no offset. right? So like per cash basis, it still flows and follows the same logic.
Okay, so I actually know a real world example of this, because sometimes that these celebrities will do celebrity breaks, like Logan Paul, for
Okay.
example. He'll do like celebrity Pokemon breaks, and he'll do this thing where he'll charge a lot of money for these breaks, like $15,000 or whatever. And before he opens the pack, he'll read a message from the person. He'll say, okay, it was like, James Smith, and James Smith is the owner of, kitchen tile remodeling in Pennsylvania or something like that, right? I actually know the guy who did this. So that could be seen as a form of advertising.
Absolutely.
And he can write off that expense.
Absolutely.
Interesting. And then you said another example that I thought was very interesting here. You said that you could buy like a card and put it as a piece of decoration in your office, and you could write off that entire expense. But if you ever sell it in the future, then you have to report that income.
Absolutely. Yeah.
Interesting,
Again,
guys. Okay.
The income. Always claim the income.
James said it. You could buy cards as decoration, as office decor, guys, and you can write it off as an expense. Okay, within reason, guys, within reason. Okay, so that was an interesting question. So we appreciate that. Let me see. I think we have another question here. Let me just screen this real quick here. Okay, so Tom Hawk here says, I'll put this up here. He says, how do you prove you spent money without a paper trail? He's done shows for decades and never has he ever gotten a receipt at his table. The IRS does not believe you. How do you, they ask for a paper proof? Like, how would you respond to that?
I mean, I would go to my records, right? So my bank records. I don't know if you write a check, you hit them with a credit card payment, Venmo, PayPal, whatever it is. Like especially like with Venmo and PayPal, if you send it, put like table at national, whatever it is. But I would create my own paper trail, like barring a receipt. They'll take a credit card statement, a bank statement, a canceled check. Any of those methods, if that works.
So I think this kind of goes to what we talked about early in this discussion, where it's about self-reporting, right? If you're self-reporting all your income, the IRS cannot come and say, well, if you don't have a paper trail for this income that you're reporting, we're not gonna allow you to report this income. Right?
Yeah, no, I mean, if you're reporting more income than is on a 1099, they're not going to stop you.
Yeah. So I don't even know, like, if that would be, I'm not sure I'm interpreting his question correctly here, but like, if he's, I don't even know what Tom, if you have a follow-up to this, let us know. But I feel like if you report all your income, then it doesn't matter if you have a paper trail or not. But if you're reporting expenses, you need to have a receipt or something for that, right?
Yeah, I mean, and even like a receipt back, that's good. But you could, if you PayPal somebody and you put on there like the little tagline, like table at national, like that's pretty good. You did it at the very moment that you spent the money. It's not like you made this up after the fact. Okay. A credit card receipt, like bank statement showing like a debit card transaction to whatever card show. Yeah, I would just try to make some sort of trail of your expenses, especially to the extent that you can.
Okay, so this is my follow-up question to this is, as a professional CPA, what do you want to see from a client that's coming to you, right? Like, obviously we use the joke is like you get a shoebox of receipts and stuff like that, but like really, if you're trying to advise anybody that's listening right now on, if you really want to get your tax game in order and make sure that everything is done correctly, how would you advise them to keep records so that when they come to a professional like you can help them out to the best of your ability?
Yeah, so I mean, like my be all end all is like QuickBooks Online. It's the greatest thing ever. It can't keep track of everything for you, right? It'll keep the ideal thing to do is open up a separate bank account and a separate credit card, and you don't touch it unless it's hobby, business related, this or that. So now your CPA knows everything in his entire world is in these two accounts, right? If it's book kept in QuickBooks, even better. I was even looking last night, like kind of in preparation for this, like apps out there that can track like your collection, and so many of them are geared towards like current market prices, like what's the value of your collection. But like with this eBay thing, I want to know the basis of your collection, right? Like the cost of each of those cards. And aside from like a good old Excel schedule, like there's not a whole lot out there right now. But even an Excel schedule is perfect. But the least amount, the more amount of work that you can do in the moment and the least amount of work that I have to do come tax time is just going to save money, right? I can do shoebox returns all day long. Every one of them that I do, I feel like my person is missing deductions, right? Like little stuff they didn't think about, I never think like, oh, we're claiming too much, right? I always just feel like, okay, I have the receipts that I have, but like, I have no mileage. I have no like, I know you're missing things, and I can't help that person because they just don't want to get QuickBooks or they don't want to track it, So I just say, even if you start on a spreadsheet, if you can do QuickBooks, it's like what, $9 a month or something like that. It's going to save you so much money come tax time. Even if you do your own taxes, it's going to drive you nuts to do that.
And then here's something that I've always wondered: if they give you like if they have a business credit card and they just print out all their credit card statements, is that sufficient record keeping, or do they need to actually keep receipts and notes of what the expense was?
No, I mean, credit card statements are accepted. The IRS will take those pretty much at face value. Now, if there's like a weird cryptic description or charge in there, who knows? Flip a coin. But typically it's like pretty straightforward when you read a credit card statement,
Oh, okay. So they will allow you, so you don't have to, do you actually have to keep your receipts anymore?
I'm going to say, yeah, just because it's like the safe answer, but like they will take credit cards at face value if they see that it's like a legitimate business expense. Yeah.
Okay. And then I'm just curious about this. Like, how long do you have to keep records for? Like, how long can the IRS go back and audit you?
Okay. So general rule of thumb is like 7 years, right? Beyond 7 years, it's got to be like a pretty egregious, like almost to the level of fraud for them to look at you. And in almost all circumstances, they won't look at you past 3 years.
3 years. Okay. So 3 to 7 years is the grace period that you could get audited.
Yeah. 3 years, you're like, okay, I'm fine, but keep the stuff till 7, just in case something weird happens. But yeah, like if you're not like leaving income off the books, you should breathe a sigh of relief after 3 years. They're not going to look at it again.
Okay. Okay. Interesting. All right. Another question here. I think we can throw up here. Edwin says, can I factor inventory into my cost basis as a sole proprietor filing a Schedule C if I'm doing enough transactions to look like a business? I think we answered this earlier, but go ahead.
Yeah, I would say claim that inventory as it occurs, right? So if you spent it in 23, that'd be a deduction in 23. And if you spent it in 24, claim it in 24. If you want to like match basis and sales, that you can do that. It's less beneficial from a tax standpoint. In the tax world, we have like 2 real general rules of thumb: push off income as far as you can and accelerate deductions as much as possible, right? So that's that cash basis scenario where if I buy a case in 23, I'm writing it off in 23. If I sell it in 24, great, I'll claim it then, but at least I got the deduction in 23, right? if you really want to match the basis, right? Like you're kind of like really small, you're not really looking like a business, then match it. But like it's a better tax situation if you look like a business and you can deduct it as it occurs, cash basis.
Okay. All right. And then just one thing I want to kind of go back on here, because I think you just dropped a brilliant idea that nobody in the hobby is even considering. Because like you mentioned, we have all these apps and these platforms that will track your inventory. They will track your current market value of your inventory, like Card Ladder and Market Movers, and there's all these other things like Mascot and things like that. But I've actually suggested this to some of these platforms that have asked me to use their products, is that there's nobody that's actually made a hobby tax app where it tracks your cost basis and allows you to do some type of printout at the end of the year that you could give to your CPA or your tax professional and get your taxes done and all your write-offs, right? I think that's a brilliant idea. So if anybody's listening to this and you want to kind of develop something like that, I think you would definitely have a winning idea. That's kind of like, what are those apps that people use that like that track your expenses? Like Mint is one of them that I heard, and then other apps like that, right? We need something like that for the hobby that tracks our expenses and our cost basis.
Exactly.
Right?
Make my life easy.
Like, who cares what your collection is worth? Because honestly, it changes all the time, and it doesn't really matter what your market value of your collection is until you actually sell it. But what never changes is your cost basis, right? If you track it, and your expenses, and nobody ever really talks about that kind of stuff.
Yeah, and now it's going to be really important to keep track of that.
So that's interesting. Okay, there's $1 million idea for you guys right there. Okay, James. So I got to all the questions that I wanted to highlight here. I do appreciate your time. We are already over. This was supposed to be like an hour and a half. I told James, guys, hour and a half max. We're already over that. So I do want to be respectful to his time here. So I'm going to give you the platform. I just want to reiterate, James is a CPA, certified public accountant. His practice is based here in Southern California, but he is qualified or certified to do taxes for anybody across the country, right? How can people find you if they want to seek out your professional guidance?
Yeah, again, so DM me on Instagram, the Hobby CPA. My website, you can see my name right there. It's www.skorheim.com. Pretty easy to remember. My email is james@skorheim.com. So any of those ways, hit me up.
And will you? I know from personal experience that you're very generous with your time and your knowledge and in doing consultations. But can people reach out to you and schedule consultations with you? Do they have to pay for it?
No, I won't charge anybody for initial consultation, see what their tax situation's like. Happy to help people in the hobby and just happy to help in general. Hate when people pay extra taxes when they don't need to. And if there's like a question that we didn't answer today, pops into your head tonight, or that was in the comments and we just missed it, email it to me. I'm happy to answer it.
And I know you're going to get this, so I have to try to save you some headache here. Do you prefer that if people have a tax-related question, do you prefer that they email you or reach out to your office, or, because I know people are going to do this, they're going to DM you on your Instagram profile? Which would you your preferred method of communication?
I actually don't mind the email or Instagram. Totally don't mind either one of them.
Oh my goodness, guys. All right. So you can email your tax question, or you can DM your tax questions to James at the Hobby CPA. We'll tag him on that. If you guys are not following James already on Instagram, go check him out, the Hobby CPA. Definitely want to give him a follow. Use him as a resource, guys, because there's not, from my knowledge, and I know a lot of people in the hobby, there's not a lot of people that advertise themselves as CPAs in the hobby. There's a lot of people that are tax professionals, but not many people that are willing to give their knowledge and their expertise to members of the hobby. So definitely I think this is a really cool niche for you. I hope that you gain a huge following from this, and that people kind of use you as a resource, and maybe this becomes another area of practice that you can kind of like claim as as part of your business here. Is there anything else that you want to tell people about yourself, your practice, or anything?
Not a whole lot. I'm gonna go to Burbank though. I'm gonna go to the Burbank Card Show in Anaheim. I'll visit you, Dan, and I got a couple of other people from Instagram I want to meet over there. So if you're gonna be there, find me. I'm gonna try to go all 4 days. I'm gonna try to get that SMC special set, Dan.
Can we, if we can make that happen, can we talk about this? You don't have to say yes right now, okay? But I'm going to put you on the spot, but you don't have to say yes right now. Can we advertise the Hobby CPA office hours at the SMC booth at the Burbank Card Show?
Yeah.
You will be there. You will sit at my booth for 30 minutes, and you will give 5-minute consultations to anybody that wants to for a period of time. Can you at least consider that?
Let's do it. Speed dating. Yeah, speed dating style. Yeah.
This is a hobby first, guys. The Hobby CPA will be at the show giving consultations for people. This is awesome. James, thank you so much for being a good sport about all this and giving us your time. Anybody that wants to find him, again, just go to his website. You can Google his name, James Skorheim. On Instagram, he's the Hobby CPA. He already gave you his email address, his website, all that stuff. So just reach out to him. Take advantage, guys, because most CPAs, they'll charge you money. They'll charge you hundreds of dollars to ask him very simple questions. James is new to the hobby, so he's eager to build his social media following and everything like that. So please take advantage of his generosity for his time, and I think that he can help you guys save money. Any closing thoughts, James?
Not really. Thank you. I appreciate the time on here. It's been fun.
Awesome. This was a great interview, guys. And again, go follow James on Instagram, the Hobby CPA. James, I hope maybe we can have you on in the future. Again, you can be a regular guest whenever we need tax guidance. Okay.
Anytime Merleworld is out of town, count me in.
Awesome. All right. Take care, guys. Appreciate it.
Two nerds wishing they could grow body hair. Comics, cards, and